Hello friend, welcome to FIN-TRAINICA channel, a channel devoted to spreading financial and investment literacy. In this playlist of finance and investing tidbits, this new video deals with why should large companies ask for less credit from their SME vendors. Welcome to this video. We find almost an obsession with large companies to take as long a credit as possible from their SME vendors. So when the vendors supply them with goods and services, typically these large companies, large firms negotiate for longer credit period. There is prevalence of a weird idea of negative working capital. In other words, they do not give a lot of credit to their own customers, so they get their payment quickly, maximum 7 days period. Particularly you find this with a lot of FMCG companies, but they want their vendors to give long credit. In other words, the vendor should finance their receivable as well as their inventory. That's the kind of idea which prevails among a lot of executives of large firms. Now, actually, if you think about it, most large companies, particularly FMCG companies, have very sound financial strength, and they can borrow if they want at very fine rates of interest. If they were to borrow, the rate of interest that they will have to face with a bank will be extremely low and competitive. Many SMEs, on the other hand, have to borrow at much higher rate of interest than these large companies, and the difference could be as high as 5 to 8% extra. So let us say, for example, if a large company is able to borrow at 6, 7, 8%, the SME would be borrowing at 11 to 13 or even 15%. Now there is a significant implication of this, both for the vendor as well as its client company which is extracting long credit. By seeking more credit, the vendors, these SMEs, are pushed to borrow at high interest rates from the bank. SMEs, also being of relatively much smaller size, a very small fraction of their large client, they do not have the talent and resources like large companies where they can have functional experts to deal with banks and manage their finances. So the entrepreneurs get burdened with the challenge of both sourcing and managing money. As a result, they get distracted from their core focus of improving operations and supporting the larger company with more cost competitive prices. Instead, they get distracted because of the demand for a longer credit. Thus, the SME vendors are pushed to the wall and they are required to load the extra cost on account of interest into the product price. Plus, because of their defocus and not having the necessary talent to manage the banking relationship, and because of the longer credit demanded, the need to continuously engage with the bankers for more credit. So as a result, their own cost base goes up, and that extra interest and the inefficient cost is loaded into the product price. It is much better, therefore, that large companies pay their SME vendors in time and rather get a discount in the product price. It will actually relieve the SMEs from their run from pillar to post to manage their finances in seeking banking support. And they will be also able to offer a discount in the product price. Their own cost base can come down and perhaps their profitability can also go up. It will clearly create a win-win for both, because the large companies, without they realizing it, are indirectly paying a much higher interest than they would if they were to borrow directly from a bank. The beneficiary is the banking system as a whole. So instead of lending to the large company at very fine, that is low rates of interest, the banking system gets an opportunity to lend money to the SME vendors at a much higher rate of interest, though actually the SME vendor is finally going to supply to a large corporation with a much better credit record. There are ideas like supply chain financing, whereby the large companies are helping the SME vendors with better rates. But it is much better that the SME vendors are completely removed from the burden of managing their finances by giving them prompt payment rather than trying to extract a longer credit and then pushing them to borrow from a bank. I hope you like this video. If you have, please share it with your friends and also share about this channel with your friends and relatives. Thank you so much.